A special broadcast following the decision of the Reserve Bank to keep our interest rates unchanged. That is a relief for indebted consumers. We have seen interest rates starting to tick up recently, but the bank is not being consistent with those rate hikes because, of course, rate hikes help deal with inflation, but they also constrain growth, and we are already in a low growth environment, constraining growth because we have less money basically to go out and spend when we're spending more to service our debts. Let me bring back our guest, Dennis George from Union Federation Producer and Sizwe Ndlana, Chief Economist at FNB. Before the break, we were talking about your different views, whether interest rates can really help us with growth. Some a view from you that maybe rates can drop down. You saying that interest rates actually aren't the issue. We've got a lot of other things going on. And he did allude to that. I was interested. He said that the rand was following commodity currencies until December. Then there was a de-link. He spoke about regulatory uncertainty. Do you believe that was reference to the so-called Nene Gate and what is going on politically right now?
Yeah, so I think so. So if you just look at the data, we were tracking, as the governor says, the depreciation in other commodity currencies. And very quickly, what that means is that if you're a commodity exporter and you earn income via selling commodities. If commodity prices drop, then the income the country earns declines quite significantly. So you start running deficits. And deficits go hand in hand with depreciating currencies. So that's certainly what happened to us, happened to countries like Brazil and Russia and so on. So if you are depreciating because of that deterioration in commodity prices and that increase in deficits, in line with everyone else who's undergoing the same thing, when you suddenly jump up and depreciate even quicker than everyone else, and that coincides with a date when something really bad happens, then clearly the interpretation must be that it's then the financial markets penalizing you, not only because you are a commodity currency, but also because you are a commodity currency that then does irresponsible things with the national CFO.
Dennis, do you accept that? Because you were saying maybe lower rates will entice investors, but investors have other concerns right now. And you, of course, were on the road show with the finance minister to Boston, New York, London, speaking to those investors, those rating agencies.
Yeah, look, first of all, I agree with this thing about the commodity price that is low, but also global demand is low. You see, and there was some silver lining when the governor mentioned that, it looks like China is stabilizing. And that would most probably be something because we export a lot of our commodities to China, but that will obviously need the commodity prices to increase, and then we can earn more income from that increases. But I think what is important for us and what the international investors told us is that they were looking basically for political certainty. And what the president did on the 9/12, was something that damaged our economy, it damaged confidence. And then 4 days later, he went on, to say, okay, let's bring Pravin Gordhan, back in. But it's more political stuff. And they've asked the minister in front of us, are you going to last for a month or are you going to last for 2 months? And that's the reason why the business and labor leaders have came out very strongly during our meeting with the president, that the president have actually mentioned to us that, look, he's only going to read the statement to the media, but he's going to leave the questions to the deputy president, to the finance minister, and to the business and labor leaders. So our collaboration is now showing quite clearly, that there is not going to be something that the Minister of Finance is going to be removed.
This is interesting because it's come up again following in those reports about Gordhan's possible arrest. We saw the rand being affected earlier this week. He's in meetings at the moment with rating agencies. So are these the kind of questions they're asking? How long are you going to last, Mr. Minister?
The other big question that the rating agencies obviously ask us, is number one, are you going to pay these bonds that you are taking out, and are you going to be able to meet? That is the kind of things that they want. But South Africa have never defaulted on that. But I think it is important, for all the stakeholders to come together. This article that came in the newspaper on Sunday was unfortunate. We have condemned this thing, and I think the ANC condemned it also, and all the other stakeholders. For us, the important thing is Pravin Gordhan is quite a stabilizing person. He's a person with huge integrity, and people that want to have a national treasury that is weak, that will come across for making political favors, those people must accept that National Treasury will not compromise.
For people who are sitting at home right now, perhaps indebted, we know there are more people in debt than saving, so high interest rates, rate hikes, harmful to them. Give me your expectations for the rest of the year and your advice.
So we are expecting, I think, slightly more interest rate hikes.
Are we talking 25 basis points?
I think maximum
0.5%, 1%?
I think maximum 0.5% over the
Okay.
And the reason why I say that is you got to look through about what possible risks do we face in future, and those risks I think are global. I'd like to think, and they pertain to the Fed hiking rates. Because they will at some stage begin hiking rates. And when the Fed starts hiking rates, you want our real rates, which attract foreign investors, to be at least attractive enough for investors not to leave South Africa, which leads to further depreciation of the rand and places upward pressure on inflation when the Fed starts raising rates. So we think if we end up with the repo rate around 7.5% and inflation falls next year as we expect, then that gap between the repo rate and inflation, I think, should be healthy enough at around 7.5% to at least keep investors interested in South Africa.
All right. Unfortunately, we have to leave it there. I was dying to ask you about those wage increases he was talking about, but we'll have time in future. Thank you for your time. Dennis George from Fiducia, Sizwe Ngedlana from FNB. And that's a wrap. Normal programming resumes shortly.